Good morning, and Titan is set to post its Q3FY21 numbers, and we are expecting a good set of numbers this time coming in from Titan. Obviously, we do have a fair idea of what to expect in terms of numbers from Titan because of the Q3 operational update. So, a good set of numbers is what we're expecting from Titan. In terms of revenue, we're expecting a 13.15% growth, and the revenues are expected to be at 7,022 crores versus 6,206 crores. So, very good growth coming in for Titan. Finally, recovery coming in, especially led by recovery in the jewelry segment. And let's not forget, jewelry segment is around 80% of their revenues. So surely positive signs coming in the top line front. Even the profits are expected to go up by 12% on a year-on-year basis, and it's expected to come in at 526 crores. Margins, we are seeing some contraction coming in terms of margins, 30 basis point contraction. So 11.5% versus 11.8%. Now, obviously, like I mentioned before, the revenue growth is mainly aided by the sharp recovery in the jewelry segment, which is around 80% of the business. So the jewelry segment is expected to grow by around 50% on the back of a better and good recovery, a sharp recovery that we are seeing coming in over there. One, obviously boosted by festive season, high gold prices, as well as wedding season demand, which was put off during the COVID period, has now started coming in. And we are seeing a lot more weddings happening. So that is also leading to a good demand coming in for wedding jewelry as well. Now, in terms of jewelry, also studded jewelry share is expected to be seeing an improvement, is what the management is also indicated. So let's keep an eye out on that. So overall, jewelry segment is back in the growth phase, and that is what is leading to the growth for the overall revenue growth also for the company. Talking about the other two segments, that is the watches as well as the eyewear business. Now that has also seen a recovery. It's coming closer towards the pre-COVID levels, and the recovery for watches segment is 88%, while eyewear business is recovered around 92%. So surely recovery seen coming back in these two segments as well. And let's not forget, what Titan has been doing is, they're shutting down their stores which are actually not working well, which are loss-making stores in the eyewear segment especially, and working on that strategy as well. So that should also lead to a long-term improvement for Titan as well coming in on that side. So that is just a point for information, but that is some good strategy coming in for Titan as well. Now, margins of the company surely have remained under pressure, like I mentioned, 30 basis point contraction due to the inferior mix. But overall, if you go to see, that inferior mix will be, is supported and aided by further, if you go to see the operating leverages that we are seeing, as well as the high cost staff base, also that cost measures that they've taken. That is something that may further not lead to a further margin contraction. So 30 basis point is as of now what we're expecting, a contraction in margin. Other than that, what are the factors that we'll be watching out for is the demand in Jan and December sales. What is the sales trend coming in? Consumer sentiments, how is that shaping up now? Is there any hedging adjustment in this quarter as well? And outlook on the eyewear and watches business is some key factors that we'll be watching out for.